We, the members of Group 9, are here to present Strategy in the World of Data, and we aim to understand the banking sector, and our bank which we've taken for understanding the same is BNP Paribas. Before we proceed further to understand how PNP Paribas strategy makes a difference, we would first try to identify the disruption waves in the financial sector. The first is the global banking outlook, followed by a change in the workforce which is focused towards customer expectation and technological advancement. Digital transformation, fintechs are accelerating digital disruptions and customer expectation is rising with rise in technological advancement. AI and robotics automation plays a major role in this sector, followed by security, which becomes a major threat due to increasing sophisticated tools and number of cyber threats. Then we come to the focus on operational efficiency. Banks have embarked on cost reduction programs but are seeing limited success. Analytics is a tool which is used to analyze data in the banking sector, and increased collaboration with fintechs have forced banks to respond with newer strategies, technologies, and approaches. Now we try to understand how data has become the new lifeline and a pivot for all the transformation. The first thing which we tried to understand was how banks are making significant investment in digital transformation. The causes are that fintechs are accelerating digital disruption in the industry. Customer expectations are rising with rise in technological advancement, and traditional banking systems considered mundane and monotonous and require significant investment plan for digital transformation. Fintechs have accelerated digital disruptions, and maximizing use of technology has given stiff competition to the traditional banking system. Also, customers are choosing their primary service financial services on the basis of demanding a personalized experience and a financial product which is tailor-made for them. Here, PNP Paribas is investing Euro 3 billion on digital transformation, boosting spending on digital initiatives by 50% over the next 3 years.
Increasing leverage of analytics to transform end-to-end customer journeys. So basically in this slide, we are going to talk about the superior customer journeys that will lead to better and faster information availability, personalized offerings, self-service channels, real-time notifications and confirmations, and live human support for complex issues and queries. Also, banks are leveraging analytics to obtain a more granular understanding of customers to personalize offerings and offer more efficient service. For example, they understand in order to understand behavioral and situational need of different financial products at different life stages. For example, Lloyd's Banking Group partnered with Google to aid customer retention by promoting loyalty based programs and for better fraud detection and to evaluate the creditworthiness of an institution requesting secured or unsecured loans. For example, Scotia Bank and Santander partnership with Cabbage. Then lastly, in order to flag anomalous transactions and prevalent fraud. So next, focus on building a workforce of the future. So banks are witnessing a shift in workforce requirements. Digitalization is not only changing the size but also the shape and skill set of the workforce. The automation of tasks provided by digital technology means that the staff who used to perform them are struggling to find new ways to be valued to the bank. Apart from this, with demand for individualized and superior customer experience increasing, banks are seeking staff with capabilities such as empathy, relationship building, and adaptability to a diverse set of clients. Further, banks have increased need for staff with skills in data science and digital technology, and with the shelf life for skills decreasing as the rate of change increases, and broad cognitive skills are becoming more important than narrower technical expertise. And so far, banks have struggled to develop the workforce they need. Acquiring digital talent is difficult because banks are not seen as the employer of choice versus fintechs. So that's all from my end. Now Sanjay sir will explain.
Thank you, Akanksha. The another emerging trend in banking is that regulators are allowing newcomers or the challengers banks to come and give a competition to the existing players like BNP Paribas or any other traditional banks. Regulators are encouraging healthy competition, and there has always been a clear gap in terms of the customer expectation and what the traditional banks were offering, and that given how wide space for challengers bank to enter in. Now, given the fact that the traditional banks come with an advantage of having a physical infrastructure, while the world is moving towards digital, challenger banks can keep their costs low and have a clear niche or the value proposition defined for them on which they can really target the specific customer segments. For example, in German direct bank, N26 is targeting the niche segments such as freelancer and self-employed person. So this is the emerging trend that these niche players or the challenger banks have started focusing on the new segment of customer, which are very niche and are going to be more profitable, and they can personalize the services for that particular segment of the customer alone. Fintech disruptions have forced the banks to respond with new strategy in the world of data, which is becoming a reality. Initially, banks had seen fintechs as a competition. Now they have changed the approach of fintechs towards being a collaborator. So what has happened is the banks initially, which saw them as a threat, now they have become a collaborator to the extent that banks like Barclays has 13 weeks of accelerator program to collaborate and interlock through a mentorship program with fintechs. So is big players like UBS also have started partnering with blockchain startups like Clearmatics, and they have an incubator program where they can really latch on to the fintech idea and expand their product portfolio as well. This is the trend, and in fact, entire fintech industry, if we say it, they're riding on the bandwagon of data, and data is the key driver for all fintech industry to drive the business on. Open banking is becoming a new normal for all the banks, and banks, keep in mind, were considered to be a kind of a very protected, regulated, and kind of a confidential center hub for entire industry group. However, this seems to be fading away. Now every bank is collaborating within themselves. They are sharing relevant data through APIs. They are making use of a lot of open banking applications, and that's where they are collaborating with partners like fintech through APIs. This is actually giving them personalize the offering for their respective customer segment. And the industry has witnessed a rapid adoption and expansion of API that is enabling communication between banks and other stakeholders like fintechs, non-financial firms, regulators, and if there is any fraud suspected, the same API also helps in controlling the crime. So this is the emerging trend in banking where data is playing a pivotal role in terms of taking the banking to the next. New age customers are expecting banks to be digitally empowering them with all right information as and when they need, and that is the reason perhaps efficiency is no more relevant for the banks to really pursue that. Efficiency has taken the shape of personalization by leveraging the applications like AI, machine learning, or natural language processing, by which they are replacing the monotonous work with machines. Now, machines are carrying out the work which humans were doing, and now humans can focus on more higher end, effective, personalized services delivery, and which is becoming the norm. So, if we look at the back office, which has absolutely been taken care over by bots, and RPA is being used to automate the processes that involve structured digital inputs, they can make their decision of their own, and they can really do it in a fraction of seconds, which really means is efficiency has baked into such a way that it's become an hygiene, and every bank is expected to do it, and they're doing it effectively. Now, personalization is becoming the new focus, and that's where banking industry is striving towards. Now let's look at how BNP Paribas is dealing with these digital interventions or disruptions, and just look at the structure of the BNP Paribas. We know BNP Paribas is primarily into retail banking, though they have corporate institutional banking. They are also partnered for insurance, and they are also there in other financial services. But majority of the revenue comes from retail banking as a business. They're present in 60 countries, more than 147 employees, more than 147,000 employees, and they are serving in their domestic market, which is France, as well as internationally. Now, in order to respond to these changing disruptions, BNP Paribas is also digitally transforming and investing. And what it really means is BNP IT landscape has got diversified, and it's matured enough to integrate with the data enabling applications. For example, ICT, which is internet communication and technology operation, is now more than in 50 countries, and they have kind of provisioned more than $1 billion for this to develop the application and improve operational efficiency. And they're looking at the ways to accelerate the digital transformation, which they actually embarked in year 2017, and they want to achieve this full by year end of 2020 to 2021. Now, the challenge what bank is facing is, while they're leveraging the strength of the integrated and diversified business model, they're also building the bank of the future by accelerating digital transformation. And to do that, the business levers what they're adopting to, the number one is they are upgrading the operational model, which is really means giving a complete relook the way they used to operate earlier, which used to be primarily around efficiency, reduction in cost. Now the paradigm has shifted, and they are more talking of revenue, higher revenue generation, more personalization, and higher margins. They are implementing new customer journeys. Earlier, they were more on a commoditized service. Now they are getting into personalized. So is the customer journey experience is also changing. They're making extensive use of data to serve the client differently, adapt to the information system, adapt to open banking, which used to be a really closed one, and their 2020 plan is creating a series of interesting narratives. Now, what they have done in last couple of years is they have united in and integrated the diversified business. That's the new data which is forcing them in order to unite diversified businesses and integrate them with common IT infrastructure, working differently to build the bank of the future. They are adopting information system to create new customer journeys. This is something which they are doing in order to organize themselves and be ready to handle the disruptions in a more effective manner. Let's look at banking industry through the eyes of BCG analysis. It's a 2 by 2 matrix on which we look at how industry is behaving in terms of predictability. How does the industry look like in terms of predictability? What it means is to what extent the future of the environment can be forecasted, and it depends on the degree of complexity and the dynamic change in the ecosystem. That's what I call it as predictability on being on the y-axis, and malleability, which is the ability of the industry or the players to extend, and they can change or shape the action of the companies individually or collectively. It means how can they really change, how quickly they can change, how can they really change themselves in order to adapt to the predictability or existing market condition. Basis this, there are four quadrants, which starts with classical, which means when predictability in the environment is high and malleability is low. Was the typical case of traditional banking system where government really defined what banks are supposed to do. They had no choice but to comply exactly the way regulators expected them to do, or the way their economics really made them do the things what they were doing. That's what is called classical. Similarly, visionary is a quadrant where the malleability is high, so is the predictability. What it means is the predictability being high, how the things are going to happen. Typically, new age internet companies, we know how things are moving, and they really control the way they want to offer, because some of those expectations from the customer, and they are the first movers in order to meet those expectations, so they get the advantage. That's what we call it as visionary. Whereas in adaptive, where the predictability is low and malleability is also low. So what happens is, if the environment is unpredictable and you or the industry cannot really change in that environment quickly, that's what we call them as an adaptive management style. So is the case with shaping, where malleability is high and predictability is low. Now let's look at, where does banking fit in? Banking, in my opinion, is a classical style as from BCG analysis, where the regulators are controlling the way banks are supposed to behave. But in the wake of this data or the digital disruptions, banks have been given the freedom in order to become more customer centric, and regulators are also encouraging competition. So there the malleability has shifted towards more positive, and predictability is also reduced because of the new entrants like fintech. So banking is at a cusp of moving little away from predictability, and they are getting a little more malleable. That's where the banking as an industry resides today. Whereas in insurance, the malleability part is little higher, because the regulators have given them the freedom, and they have set the threshold where they cannot really cross in interest of the clients. Whereas predictability in insurance is also pretty high, because this has become a real need for ages, but they have the ability to customize the products and offerings of the insurance the players have. That's why they fall in the quadrant of visionary. Whereas in capital market, it's an adaptive strategy or adaptive style, what players generally adopt, because capital market is also regulated, but there is a freedom in terms of customizing the product, and the industries are given a little bit of freedom that they want to adopt to this the style, and that is what I call it as adaptive. So capital market as per BCG also falls in the area of being adaptive. The third dimension what BCG brings in is of harshness, and this is the extent to which an environment lack the resources, for example, due to some reason. And this is harshness, in my mind, the typical example in India was demonetization, where the regulators or the environment really posed a kind of a different scenario on all the players in the industry. And due to that kind of a demonetization shock, the survival of the industry really depends on this harshness of this environment, and that's what clearly determines who or which player is going to be successful. Whoever adopts the strategy or the style is in such a way that they can really survive the harshness of the environment, they would become a leading player. And that is what is happening in case of BNP Paribas as well. So BNP Paribas, the strategic style is typically a mix of classical, adaptive, and visionary. They announced their transformation strategy in 2020, and that's a clear reflection of their strategic style mix. The highlight of this 3-year strategic plan, which was announced in February 2017, was they are going to leverage the strength of integrated and diversified business model. That was number one. Number two, they are talking of building the bank of the future by accelerating digital transformation. That's number two. They are refocused on CSR activity. That is where they have an ambitious corporate social responsibility policy. These are the themes for their next data structure or data strategy, or their uh, ways to deal with this disruption. The group also plans to achieve this by rolling out new customer journeys. which is generally a gray space and which has been the gray space for the traditional player where fintechs were filling in. So they're rolling out series of new customer experience journey with new services, new products, and new digital experience. They're evolving the operating model by optimizing and automating end-to-end processes and simplifying the organization and developing shared platform where the players like fintech and the third-party service providers can come collaborate and make it very customer-centric offerings. They are investing a lot in upgrading their IT system to leverage the existing technology, which is driving the newer customer experience and a better customer experience. They are harnessing the power of data and they are reinforcing data storage protection and analysis capability. After GDPR, which has come into action, this has got the momentum and their focus. They're also focusing a lot on digital, cooperative and agile working practices, which really means is they're not following up on the practice of a typical waterfall model of developing their practices. They are getting more into agile and more kind of a collaborative approach in order to counter these changes or rather leverage these changes. BNP Paribas actually came up with a model of operationalizing their strategic intent through a program, and that program was called an STAR program, which had the contours of upgrading the operational model as one. Second was making better use of the data to serve clients. Number three was to adapt information system, work differently, and this is where I'm saying move away from efficiency. That's where they started focusing on being more personalization, implement new customer journey, and these five levers of new customer experience and a more effective and a digital banking way is really propelling their growth in Europe and in international market as well. Now let's talk about how BNP Paribas is looking to leverage the strength of the integrated and diversified business model. The theme earlier when they started this business model and they started talking of economies of scale where they went on scaling up their business operations in multiple countries, their theme was simple and efficient plan that really enabled them to derive benefit from sharing IT operations, functions, and procurement, which resulted in very significant kind of a cost saving up to the tune of 750 million euros. That was way back in 2016. And this savings was just one time that really made them be efficient and they got the scale of operation. In addition, these economies of scale led them to increased security, IT standards, and they adopted to private cloud, data secrecy, and closed IT architecture. Overall, roughly one-fourth of the Euro 3.3 billion savings delivered by simple and efficient theme were derived from sharing resources and system among its business and geography. These were some of the hygiene initiatives which BNP Paribas started in order to leverage the power of this data integration and data journey. That was step one or step zero to start with. Building on the foundation of removing the inefficiencies from the system, BNP seeks to streamline and automate the processes, promote innovation, digitalize and personalize the customer journey while making effective use of data. So what they're doing is they're focusing more on collaborations, more digital and agile work practices they're bringing in. Day-to-day digital environment and digital and innovation driven culture are being is being kind of promoted. Training is becoming the focus. When they started with implementing new customer journey, they took the route of digitally expanding seamlessly the personalized customer journey. More services, more choice, 24 by 7 and whenever they want to. The right product at right time through the right channel was the theme through which they were implementing the new customer journey. New services were made available. They upgraded their operation model, and what it really meant was they streamlined end-to-end automation, end-to-end process through automation. They simplified the organizational structure, and it was made more flat. They were more customer oriented rather than the inward thinking traditional bureaucratic organization. They started sharing the platform, which was very protected initially to start with. BNP also seeks to streamline and automate processes, and they want to leverage the technology, and they want to improve the IT efficiency and promote innovation through this. BNP has differentiated the strategy for each division based on the operating context. One size fits all kind of a philosophy has been given up by BNP so far. In domestic market, which is France, they're focusing on strengthening the sales and marketing drive with new client experience, improving the product offer and making available new services. And in France, they enjoy the favorable risk environment. And that is the reason domestic market continues to reduce cost of risk in Italy, in France, in Europe primarily. And that's what is giving them a kind of de-risking from the emerging threats. And that's the reason they're aiming to improve its operating efficiency by actively optimizing the branch network, transforming the operating models, and adapting IT in the light of increasing digitalization. While in international financial services, the division is strengthening its position by stepping up the developments through new offers, new partnership, new collaboration, and access to new countries for their specialized business. Consolidated its leading position by leveraging best-in-class offers, growing retail banking beyond the European zone, and further improving business cooperation within the group. BNP has started focusing on improving its operating efficiency through an acceleration of digital transformation and process rationalization. They are also going to have, and they have in fact started leveraging internet banking extensively. They have They have capitalized on the promising start of its transformation plan in 2016. Corporate investment banking will strengthen its corporate and institutional client franchise further, and they're going to rely more on the fee generating activities such as advisory, cash management, or something as trade finance. That's where their focus is going to be, very country specific and very client centric, or the segment specific services they are designed to reach on the background of their strategy, and that's the refreshed. Now if you look at the entire approach, what BNP Paribas has taken entirely is that they are leveraging data in terms of expanding their international presence. They want to be a kind of continue generating revenue in their domestic market, and while they are building the differentiated customer journey for the customer segment, which are new and some of them are existing, and they are collaborating with fintech in order to leverage the ecosystem and do more business and provide better services to the new customer group. Thank you so much.